Thank you everybody for joining us here today. Good morning or good afternoon, wherever you may be located. We are here today to talk about stacking or LTV stacking, which is a unique feature for us at American Heritage Lending. We think by having this tool in your arsenal of tools that you'll have some unique features for your borrowers, and in doing so, will give them great options and help yourself stand out from your competition. So, as Miriam said, my name is Jamie Gilso. I'm here with Jackie Weed, who oversees and runs all of our third-party origination operations. Quick agenda today. We'll just touch on who we are, what we do, and why you may want to partner with us at AHL. We'll dive into LTV stacking, a little bit of Q&A or as much time as you need, and then how to contact us should you have follow-up questions. American Heritage Lending is a full-service, nationwide, non-QM lender. The company was established in 2008. Our corporate office is in Irvine, California. However, we have operations teams throughout the U.S. to ensure we have coverage through all time zones as needed. Our management team consists of some longtime professionals. Jackie and myself both have decades of experience, particularly in non-agency or non-QM lending. So we think we know credit and look at scenarios with that eye. Who are we? We are absolutely a lender you can trust. Again, we feel we know non-QM very well. We're a customer service-oriented lender and platform. Great technology, great account managers, great AEs, help you and your borrowers through their transactions. We pride ourselves in using common sense in all of our underwriting. It does allow us to make many loans that others may not, assuming the loan has good characteristics behind it. A little bit about what we do before we dive into stacking. I won't bore you with matrices, but again, we do have a full suite of non-QM products, all of which have some unique wrinkles or nuances or niches. Just real quickly, for example, our bank statement loans, we go as low as 20% with the expense ratios. We have a myriad of DSCR programs. One notable feature, we can use the 1007 over the actual lease when beneficial in some cases. We have a bridge loan for primary residences, which is unique. Great door opener for your realtors. Foreign nationals up to 75 LTV. Non-mortgable condos as well as condo-tels, and we understand the difference between the two. In a few different ways, we can use asset depletion, whether it be as a standalone income source or in addition to. Again, we are nationwide, so with the exception of the 2 Dakotas, you can see we've got coverage throughout the country. We are one of the only non-QM lenders fully licensed in the state of Mass, so we can do TRID loans in Massachusetts. We do offer business purpose loans in both New York and Hawaii. Why you may want to partner with us here at American Heritage Lending, there's a variety of reasons, far more than fit on this slide. But again, we have a full suite of products. Glad to discuss further after this presentation with any of you. We utilize common sense underwriting. We have a strategic partner who's one of the largest securitizers of non-QM paper in the background. As such, we make our own guidelines. We underwrite to our own guidelines and probably about 40% of the time make exceptions to our own guidelines. We have a very user-friendly client portal. We hear from our customers, from our brokers and their processors and their LOAs, how user-friendly that portal is. They say it's very close to or similar to an A-paper portal where you can register your loan, lock your loan right there on the spot, disclose your loan right there on the spot, etc. You always have access to your loans. We offer multiple delivery channels, offering both wholesale as well as correspondent, non-delegated and delegated. And we feel we have this probably best-in-class turn times for non-QM. On average, every month, our loans come in and go out from registration to funding in probably about 28 days. Again, that includes all our trade loans. There's multiple times every month where Jackie and her team close loans in 8 or 10 days for some of our partners. So let's dive into LTV stacking, which again is a unique feature. My guess is many of you have not heard of this in the past. It is somewhat of a niche product we have here at AHL. So really stacking is the ability to finance broker fees and or discount points beyond the qualifying LTV. So we're adding those points to the loan amount. The broker fee and or discount points are again stacked on top of the qualifying LTV, hence the stacked term. However, your pricing and qualifying criteria stay at the pre-stacked loan amount. Meaning your pricing and FICO tag will stay at that original loan amount and that LTV. I'll give you some examples of that in a minute. It can be a little confusing, but I think once you see it, you'll understand the value of it pretty quickly. This can result in a lot of benefits for you and your borrower. One is it can result in a lower rate in payment for your borrower. We'll put that on display. It allows you to earn the same compensation as you wanted to originally, potentially with more attractive terms to the borrower. And again, because many people don't have this option, probably more attractive terms than some of your competition offers who do not have stacking, who do not have a partnership with American Heritage Lending. It can require less funds to close on a purchase for your borrower. And conversely, on a cash out refi, they can maximize their cash out, whatever the purposes may be. So it's really a pretty neat feature. I'm going to try to give you some examples here. So here's an example where a purchase transaction, and really the borrower lacks the funds for the broker fee. So the borrower has $500,000 purchase, 80 LTV. Borrower has that $100,000 down payment right there, plus applicable impounds, attorneys, U-Hauls, etc. But they're really lacking, that dollar got stretched pretty thin, like it does for all of us when you buy a house. And they're really lacking a way to pay that broker fee. So it's a par rate of 8% in this case, and that rate's probably not accurate at this time. I'm making the math easy for myself. It's a broker fee at this point of 2% or $8,000, right? 2% of $4,000 or $40,000 is $8,000. So in this case, without funds to bring to the table, most of our competition would say, okay, we'll increase the rate to 9, right? We'll go from 8 to 9, and we'll pay the broker the 2 points, and the customer has a 9% rate. Well, with our stacking solution, we would keep the rate at 8%. We would add your broker fee to the loan. So yes, the loan amount does go up to $408, whereas with our competition, the loan amount stayed at the original $400. However, the net result now on this transaction is a payment that's almost $300 less. So again, you think of this purchase, borrower stretched thin, put all the money into the down payment, etc. Spouse wanted new furniture. It's just not really much money for the broker fee. Rather than increase the rate to 9%, we will increase the loan amount to $408. But the net in terms of rate and payment are actually less, in that solution. I got so excited I overclicked, see? So again, we are not partial either way here. We are happy to give you option B. We are happy to give you LPC if that's what you signed up for in your LPC agreement. We do that every day. But this is about giving you more options and to in turn give your borrower more options. Whatever one you pick, we're glad to service you with in less than 30 days. But this is unique, and the reality is some borrowers may choose option 1 based on their situation, how long they intend to stay in the house, how long they intend to hold the mortgage, etc. Let's look at another example. So this is a scenario where the borrower wants to maximize their cash out. I'm sure every loan officer and originator on this call has heard that before, particularly in the day and age where you deal with a lot of investor loans and they need the cash or the capital for the next transaction. So here you have a $2 million value, 65 LTV cash out, the property's free and clear. It's a $1.3 million loan amount. Just as a quick aside, at American Heritage Lending, LTV 65 and less, we have no restrictions on cash out. So in this case, that 1.3 cash out fits our guidelines nicely. Par rate of 8.25, which is kind of strong, I think, for that transaction. Borrower fee, 2% again, so $26,000. Again, the whole intent here for the borrower is to maximize cash in hand for the next deal. In our case, we're going to increase the loan amount to 1.326 as opposed to keeping it at 1.3. And then that result is the borrower gets the full 1.3 million cash out before other applicable closing costs, attorney fees, etc. Where without the stacking feature, the borrower would have received approximately $26,000 less in hand. So just again, a nice option to give your borrower. There is no difference to rate or pricing to give them this option. It's just, and again, if they wanted option 2, we're glad to close that loan for you pretty quickly as well. But nice options for you to look maybe a little different or a little more astute than your competitors. Another basic purchase transaction, trying to illustrate less funds to close, 900K purchase. These must be California loan sizes we're doing now, the last 2. 80 LTV. I live in Rhode Island, so those loan sizes just, sometimes remarkable. 720 loan amount. Broker fee again, 2%, $14,400. In our case, we're going to increase the loan amount. We're going to add that $14,400 broker fee to the loan amount. So we're at 734,400. Funds to close on our transaction are 180,000, meaning the down payment, again, before applicable closing costs or attorney fees. Otherwise, if you cannot finance the broker fee into the loan, and the borrower has to bring those funds to the table, you can see the difference there, 194,400. So kind of three basic examples of stacking and how you can utilize stacking for the broker fee to affect either funds to close on a purchase or maximizing cash out proceeds on a refi. I think you see the gist there a little bit. Again, your account executives are very well versed at this, can answer questions for you. Let's look at now perhaps how we can use stacking to maybe save a loan or structure a loan. So this is a DSCR loan. We've got a $500,000 value and 75 LTV, a 375 loan amount. A par rate, that's a pretty strong par rate, 775. And you got gross monthly income of $3,000. And you've submitted this loan to underwriting. It's all good. The borrower loves the rate, adamant they want 775, adamant they want that rate without any money out of their pocket. You feel good about the ratios, you've done your homework, and we've all lived this. You know, we live this weekly on our side. And next thing you know, unfortunately, something came in high, right? PITIA is now just over $3,000. And as a result, your DSCR ratio is below 1. And this is a real life scenario, right? I mean, this is literally just pulled this from one of our better account executives who had this happen. And this is real. We all live this. The homeowner's insurance came in high, condo had an assessment, something. As we know, if you've ever dealt with DSCR loans, 1% coverage ratio is kind of the magic number. And if you go below 1, some lenders can't even do the loan. At American Heritage Lending, we actually have products that go down to his no ratio, so we could still do this loan. But of course, there's going to be a pricing adjustment for anything below 1. Meanwhile, your customer is probably, a little upset with you, right? They thought everything was good. They want 775, and they don't want to hear about DSCR ratios. They probably don't even understand the acronym. So what we did is we switched this to interest only. Okay, so this was a 30-year fixed. We're going to switch this to an interest only. It's still a $500K value. It was based off of 75 LTV. We're now going to actually increase the loan. So interest only, as everybody knows, has a pricing adjustment. In our case, that pricing adjustment is 3/4 of a point to price. Well, the customer is adamant they're not going to take money out of their pocket. So what we did was we added that 3/4 of a point. So in this case, it's $2,200 and change. We added it to the loan amount. Loan amount went up. We are now on an interest-only term. We've got a great interest-only product here. It's interest-only, fixed for the first 10 years. And after that, it automatically switches to a 30-year AM with no adjustments. So that being said, as a result of that, we kept the 775 rate, so customers happy there. No money out of their pocket. Of course, the rent stayed the same. And now look at this. Their monthly payment, based on the interest-only, of course, amortization, is $2,790. And your DSCR ratio is now back over 1. And this really made the difference on this loan. This is based on a live loan that happened in the last 7 days or so that shamelessly plucked and used for this presentation. So another way you can use stacking, there's a lot of advantages here. A few things to remember about stacking is you can stack up to 3 points, and they can only be used for broker fee and or discount. So this can get a little confusing. I'm going to try to give you a tangible example now. If I don't blow this from a technology perspective, drag this screen over. Here's our pricing engine. This pricing engine is available on our webpage, ahlendtpo.com. I'll show that in a second. This is a basic, cream puff deal we'd all love to find every day of the week. Just a primary purchase, bank statement, 24 months, high FICO, nice DTI, $500,000 purchase, $400,000 loan, 80 LTV. I'm going to run some pricing here. Green is generally good in our business, right? I think that's universal. And here, 7.5. I got to tell you, that's a strong par rate. So 7.5, 80 LTV, bank statement deal, nice clean deal. I'm going to stick with the same theme. Mrs. Loan Officer on the phone. I want to make $8,000. 2 points, Jamie. I saw your stacking webinar. And so you're telling me I can just add my broker fee to this loan amount right here. So loan amount goes to 408. And even though my LTV went to 81.6 right here on these little boxes, you're telling me when I run pricing, Jamie, I'm still going to have the 80 LTV pricing. And I say, yes, that's what we told you. And you hit green, and it's now 8.5, which is not quite 7.5. And of course, you call me and yell at me and say, this was a bad webinar, please don't show it again. So over here in this myriad of buttons that we all have in technology, you'll see stacking fees. Just make sure you click yes whenever you want to utilize our stacking tool. Thankfully, we have this stacking technology literally built for a whole system and process. So you say yes up front, you structure the deal up front with stacking. It's not going to go in the background. It's not going to get mixed up with a bunch of manual calculations or Excel spreadsheets. This is tuned in systemically throughout the process. And even a little reminder here, your loan amount should include stacked fees. In this case, it does, right? 408, 81.6. I'm going to rerun the pricing. The only change was 81.6. I just clicked yes to stacking, and we should have that 80 LTV rate, and there it is. So that right there is really kind of the essence of stacking, and it gives you some tangible benefit examples of a purchase where the borrower can finance the broker fee, which would increase the loan amount, which would increase the LTV, but there's no ramifications from a pricing perspective. So hopefully that helps put it a little more in perspective in terms of stacking. And as I mentioned, that calculator is available here on our webpage, or that quick pricer, pardon me, ahlntpo.com. You don't need logins for this webpage. So a few notes as it relates to stacking. I'll be glad to open up the questions. Again, it's a maximum of 3 points that can be stacked on a given deal. And again, those points can only be used towards broker fee and or discount. They can't be used for junk fees. They can't be used for underwriting, appraisal, impounds, U-hauls, none of those things. You can bifurcate on one loan where they go. So for example, you could stack 2 points and you could pay one to the broker and you could pay one in discount to buy the rate down. You could stack 2.5 points, etc. We just ask that you please do so in quarterly increments. Stacked fees are fully disclosed. So if you are stacking in that last scenario, 2% broker fee, then on the LE and CD, it'll show a 2% or a broker fee of $8,000. So these are disclosed. This is not any kind of hocus pocus or shell game. There's benefits to this, as we put on display earlier. We're not mandating stacking on anybody. We just feel these are nice options that you can have to give to your borrower. So fully disclosed. All stacked fees are included in your high cost calculations. So just remember that as well. Just because we stack the 2% broker fee, it still counts towards any state or federal high cost, 3 or 5 point caps based on where you are. And we do have some LTV limits on where you can stack. So for example, up to 80 LTV on purchases and rate and turns in some scenarios, you can stack 3 points on top of that 80 LTV. Those caps or limits are reflected on our rate sheets, so you'll see those. We also have a couple job aids or flyers here in the handout section as well to illustrate some of this.
Hey, Jamie?
Yes?
I have a question. Are you ready?
Yes. Sure, hopefully.
The question says, on stacking, does this work on correspondent loans, if not a broker fee, but an origination fee? If so, how would that work?
Yes, you can stack on core. I'll let Jackie chime in if she wants from like a systemic perspective, but it is available.
No, I was just mentioning to Jamie we couldn't hear him before, so.
Oh.
But you're good now, Jamie.
Okay, so Jackie, not sure if you heard the question. Jamie was asking you to shed some light on this. And the question pertains to correspondent loans. Are we able to stack origination fees on correspondent loans? And if so,
yes.
How?
The stacking works exactly the same way. And we can surely assist with how to prepare any of your disclosures. But the stacking is exactly the same as it is for wholesale.
Great, thank you. That takes care of the questions for now.
Great. So, in summary, stacking, we feel, gives you a lot of options. It can allow you to finance your broker fee. Again, it can require your borrower to bring less funds to close on a purchase and maximize cash out on a refi. Certainly, by having these options, hopefully you can stand out from your competition a bit. Giving your borrower more options will give them more empowerment in the process of purchasing or refining their home. And ultimately, we hope these tools help you originate more loans, whether it be through your realtor referrals or through your borrower referrals. So with that being said, we will open up the Q&A now. You can see we've got some contact info there if needed. Again, Jackie's here, who runs all TPO ops and credit. Glad to try to answer scenarios and or questions if you have them.
We have a question. The question is, can the DTI exceed 45 when stacking?
Yes.
Yes, it can. In some instances, we go up to 50% DTI on some of our programs, but we will always look at DTIs up to 50% on an exception basis. So what we do look for is, solid residual income and compensating factors, but we will exceed the 45 DTI.
We have another question. Does this work with bridge loans too?
No, no, sorry, Jackie. No, we don't stack on bridge loans or DSCRs below 1.
Can we change to stacking after the loan is locked without stacking?
Yes. As long as it fits guidelines and parameters, yes. Probably would trigger a COC, but yes.
Thank you for that. Give me just a second. Let me see if there are any more questions. Can the existing lease be used as opposed to the 1007?
Yes, it can. So if the existing lease is greater than the 1007 and it's a cash out transaction, we're going to ask for 6 months of proof of receipt of the rental income. If in fact it's a newer purchase money and there's a lease that's been in place, we're going to ask for a proof of the security deposit and also the first month's rent. We have a 20% rule where, we look for it to be 20% either way. So 20% of the 1007 amount or greater than 20% of the 1007 amount or vice versa. But, as Jamie mentioned, we're a make sense lender. So if you have scenarios that do make sense, sometimes we have borrowers that have had long-term tenants and the rent that they're charging that tenants may not be market rent. So, we'll allow the 1007 rent to be used in that instance. So, we will be flexible and look at each scenario individually for you. And we can do that pre-submission.
Wonderful. That's great. We have another question. Jamie, can you please go through the pricing again?
Sure. In terms of the pricing engine per se?
That's how I'm understanding it, yes.
Not a problem. Assuming I can pull it up properly. This is a whole nother scenario. Hey, there it is. So, and if somebody wants to, type in any kind of scenario, I'll be glad to try to plug it in. But this is a basic ADLTV bank statement primary purchase, 24-month bank statement, TRID loan. And in this case, I'll just go through the whole example again, honestly, if that helps. You can see we've got all our normal drop downs. We have a field for stacking fees. At this point, it says no. Primary residence. I don't think you can buy a house for $500,000 in Irvine, but we'll leave it for now. And we'll just we'll run pricing. You'll see a par rate here of 7.5. So again, that's a 7.5 rate at ADLTV. And now you want to, let's say, make 3 points on this loan. So it's $12,000. What we're saying is you add the $12,000 to the loan amount. And just for illustrative purposes, I'll point out your LTV is now 82.4. So we're over 80. I'm going to rerun the pricing without doing anything else yet, just for illustrative purposes. And now you'll see the rate jumped, right? We basically went from 7.5 to 8.5, which is really the 85 LTV bucket, right? We're all in the mortgage business. We know that when you go over 80 is when you start incurring some of your bigger hits, whether it be guidelines or pricing. So we're going to come back over here now. where we have the buttons, we see stacking fees. I'm going to click yes. It's going to remind us to make sure your stacked fees are included in the loan, which they are still. And so we'll stay at 82.4 LTV. By changing that button to yes on stacking, when I rerun pricing, we are back down to 7.5, or what was the 80 LTV rate, even though our LTV is now actually 82.4, and we have financed your 3-point broker fee. So hopefully that helps a little bit. I can, keep running scenarios. I don't want to bore anybody, or Miriam, you tell me, but
this is good.
Okay.
Thank you. We have another question, and the question is, can we stack on the DSCR foreign national program?
Yes. So on DSCR, your stacking limits are 75 LTV, purchase or rate and term. You can stack 3 points on top of that. It's what we call InvestStar or InvestStar Plus. So 75 LTV, purchase rate and term, you stack 3 points on top. On a cash out, that max is 70. So I'm gonna run a foreign national scenario here. So this is kind of, when I was a young guy, they call freestyle, so I might mess this up. I'm gonna do a business purpose loan, foreign national purchase, DSCR. On foreign nationals, just for the record, when there's no FICO, if there's no credit bureau available in that country, we'll default to a 680. I'm going to assume a 1% coverage ratio on my DSCR. We'll do a 5-year prepay. I'm not going to stack fees yet. Clearly, this needs to be an investment property if we're going DSCR, so I just broke a lot of laws. So I think this will run, hopefully. Live crowd. You can see my sweat. So 75 LTV, purchase, investment. I forgot to put foreign national, I just realized. So let me do that quick, right? What did I see? Citizenship. So let me do this. That was a test. I was expecting somebody in the crowd to call me out. Nobody did. That was a lie, by the way. So I'm going to rerun pricing, hopefully properly this time. 8.5. That's a pretty good rate. So business purpose, DSCR, foreign national, purchase, 75 LTV. And now Mrs. Broker wants to make 2.5 points. So let's do easy math for me. I'm not going to get so good live here. So let's use 2 points, which on 300,000 is $6,000. So here comes the stacking, right? So we're currently at 8.5. We went to 76.5. I'm going to click get pricing. It's going to say ineligible. You'll see because I didn't click yes to stacking. This will always tell you what you did wrong. I know because I live it a lot. Here's another joke. So we come over here to stacking, yes. Okay, make sure it includes your fees, which it does. LTV stayed the same, 76.5. And this should come back firing green. And there you are. Back to your 8.5 rate, right? So here's your foreign national scenario, 75 LTV, grossed up or stacked up to a 76.5 to include your broker fee. Still qualifies. Pretty sure nobody else in non-QM is doing this, what we just saw here today, folks. So whoever this broker is that put this on there, thank you for the tee up. You've made us look pretty good. And there you are.
Good job. The next question, are the cash outs capped at 75% with a 6-month history of receiving the rents?
No, the 6 months of receiving the rent is to use a lease in place of a 1007 for on a cash out deal. That was where that came in to be, the 6 months.
Thank you. Let's see. We have another question. The loan amount with stacking may exceed the appraised value, correct?
No.
Mm-mm.
No, because then we'd be doing 100% financing. So the loan amount, no, I apologize for confusion, but that wouldn't be the case. Whoever that is, you want to reach out afterwards, we're glad to walk you through that, but no, that wouldn't happen.
Perfect. Let me see if there's more. There are no more questions in the queue. Have we answered everyone's questions? All right, it seems like we have, Jamie.
Okay. Well, you know, with that being said, again, we thank all of you for your time here today. We really hope you got something out of this. The whole intent of this webinar and the subsequent ones that we'll do is to really help you originate more loans. One thing we didn't do was put up our matrix or try to talk a lot about us. We want to give you tools as the originator. We all feel 2024 will be a better year than 2023. And so let's all get prepared early and have some fun. Feel free to reach out to your account executives with any questions. Head to our webpage. We'll be glad to help. Thank you, Jackie and Miriam. Talk to you all soon.